What if I told you that today's silver crash is not just another market blip? That what just happened could change everything for investors, big and small, in ways you're not prepared for. I'm talking about a sudden 10% drop that shocked traders, rattled the markets, and left people scrambling to understand why this even happened. And no, this isn't fear-mongering. It's a real, urgent market signal you need to know about. Before we dive in, make sure you hit that like button and subscribe to Silver Shockwave, because the updates and insider insights we are about to cover can be missed if you are serious about protecting your wealth. Now, let's set the stage. Just 24 hours ago, silver was showing strong momentum, climbing steadily, with investors feeling confident after recent gains. And then, almost overnight, everything changed. Prices tumbled, charts flashed red, and margin calls started hitting traders who were overexposed. A 10% drop in a single day is not something we see every week, or even every month. It's the kind of movement that makes seasoned traders sit up straight, and for everyday investors, it feels like the floor just vanished under their feet. So, what caused this sudden plunge? There are a few key factors working together like a perfect storm. First, there's the institutional selling. Reports are coming in that large holders, including some hedge funds and even international buyers, offloaded massive positions all at once. When big players sell in volume, it triggers automated algorithms, margin calls, and panic selling by smaller traders. The effect cascades, and before you know it, the market spirals downwards faster than most people can react. Second, we have global economic pressures hitting precious metals right now. Interest rates, inflation data, and geopolitical tensions all play a role. But here's the thing. Most casual investors miss. Silver is far more volatile than gold. While gold often acts as a stable safe haven, silver reacts more sharply to both market fear and speculative trading. So when uncertainty spikes, silver doesn't just wobble, it can drop in double-digit percentages, exactly like we saw today. And then there's the COMEX factor. For those who don't know, COMEX is the hub where most silver futures are traded. Today, we are seeing delivery risks and potential shortages influencing prices in ways that aren't obvious at first glance. When institutional traders anticipate changes in physical silver availability, they adjust their positions aggressively. That alone can move the market significantly, even without a major news headline driving retail panic. Here's where things get interesting for you as an investor watching from home. Market crashes like this often trigger emotional responses: fear, regret, I should have sold earlier, or I should buy now before it rebounds. But let me tell you, decisions made in panic rarely end well. Silver Shockwave has always emphasized strategy over reaction, and this is a perfect example. The smartest move isn't to chase the dip blindly or sell everything out of fear. It's to understand the mechanics behind the move and plan your next steps carefully. Now, let's talk about the short-term outlook. Right after a sudden drop like this, volatility usually remains high. You'll notice sharp bounces, rapid recoveries, and sometimes even more dips. Why? Because traders and algorithms are constantly adjusting positions. Some are trying to capitalize on the panic, while others are forced to cover losses. In the next few days, we could see silver stabilize, or we could see more downward pressure if macroeconomic signals remain negative. The key here is patience and timing. Long-term, however, there's a bigger story unfolding. Despite today's crash, the fundamental drivers for silver remain strong. Industrial demand is climbing, central banks are still managing inflation with tight policies, and geopolitical tensions continue to make precious metals attractive as a hedge. Crashes, like today's, often scare casual investors away, creating buying opportunities for those who understand the market. Historically, after big dips, silver has recovered and sometimes even surged beyond previous highs. But timing is everything. You don't want to be the first to jump in blindly, nor the last to miss the move entirely. Let me give you a real-world example. Back in March 2020, silver dropped sharply amid global panic and market uncertainty. Many retail investors sold in fear, locking in losses, while larger players quietly accumulated physical silver and futures at discounted prices. Within months, silver rebounded significantly, rewarding those who stayed strategic rather than emotional. Today, as 10% drop could be a similar opportunity, but only if you approach it with knowledge and a clear plan. Another thing to watch closely is the correlation between silver and gold. Often, when silver drops sharply, gold either holds steady or moves more moderately. This creates a window for hedging and diversification. Investors who understand this relationship can balance risk and take advantage of volatility. Silver Shockwave will continue providing these insights as the market reacts, so make sure you stay tuned and hit the bell icon if you want to get real-time updates. Now, let's talk psychology. Watching a sudden 10% drop in silver can feel like a punch to the gut. It triggers fear, doubt, and even panic. But here's the secret. Every market movement has a story. If you take a step back and understand the underlying forces, supply and demand, institutional moves, macroeconomic data, you turn fear into opportunity. This mindset shift is what separates average investors from those who consistently make smart moves, even during crashes. Looking ahead, what should you do if you're holding silver right now? First, assess your position calmly. Are you over-leveraged? Do you have a diversified portfolio? Second, avoid making rash decisions based solely on today's drop. Use this as a moment to reevaluate, not to panic sell. Third, consider scaling in gradually if you're looking to increase exposure, rather than going all in at once. History shows that measured moves often outperform emotional ones in volatile markets. And here's something most people overlook. Market sentiment matters more than just numbers. Social media chatter, trading forums, and news headlines can amplify panic or hype, creating short-term swings that don't reflect actual supply and demand. That's why channels like Silver Shockwave exist, to cut through the noise, provide clarity, and help investors see the real picture behind the headlines. Before we wrap up, let me stress this. Crashes happen, volatility happens, but knowledge and strategy are your strongest tools. Don't get caught up in fear. Learn from what's happening today. Observe, analyze, and position yourself for the opportunities that volatility brings. Every big move in silver, whether up or down, carries a lesson. And today's 10% drop is no different. Finally, I want to hear from you. What did you do when silver dropped today? Did you panic sell, hold your position, or see it as a buying opportunity? Drop a comment below and share your experience. Your insight could help someone else make a smarter move. And if you found this analysis useful, don't forget to share this video with your friends or fellow investors. Knowledge spreads, and in markets like this, staying informed can make all the difference. So remember, today's crash is not the end. It's a signal, a warning, and a potential opportunity all wrapped into one. Keep your strategy tight, stay calm, and follow channels like Silver Shockwave for the real story behind the numbers. Markets are volatile, but with the right approach, volatility can become your advantage rather than your fear.